Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 26th of January, 2021, 5:50 p.m. Central Time. Interesting day. Very interesting day. And more interesting tonight. We've had a shift again. Now the Russell is starting to lose to the other indices. So the small cap's not getting the bid that we're seeing out of the other three indices. Metal's down a little bit. The dollar index drifting. Tomorrow's news will be, of course, the FOMC meeting that comes out at 1 p.m. Central Time with the monetary policy statement. And at about 1:30, they'll begin another conference where the newscasters will drill the Fed chairman. But I wouldn't expect any change in their posture. I think he's just going to say it's all systems as it is. They're watching the COVID. They're watching how the economy's doing. He'll give you some bright spots, some bad, but don't expect the Fed to change anything. When we take a look at the S&P 500 area chart of just closes, you're up about 0.3% for the week, up 12.25 points. If the market finished here, it's an all-time high on a closing basis. When we take a look at the day chart, you got up today to a new all-time high. Remember, we're in the evening trade now, so you haven't taken out Tuesday's high, but you're still very nicely higher. The market's in an uptrend. You have the classic pattern of higher lows on the swing line and higher highs. What a swing line does, and don't forget that, it's a line that gets drawn according to 5 rules that I set up. I wrote this indicator so that I could easily look at any chart and determine, is it in an uptrend, downtrend, no trend? If it's in a trend, what is the risk associated with the trend to break the chart pattern? So you're in an uptrend. You'd have to take out 37.88.5 to break that pattern, and the market's 38.47. So in round figures, you've got about a $3,000 risk. It's what I want to know right away. It's so easy to do it this way. And the rules are written looking at, do you have a higher high day, a lower low day, an inside day, an outside day up, outside day down. Very simple. I teach it in my charting course, and it's here in what we do on the charts. I filter the swing line with moving averages. When the market is over the 18-day moving average of closes, I call the bias up. When the market's under it, the bias down. So if I have an uptrend on the swing line and you're over the upside bias, I'm instantly bullish. I'm looking for spots to enter. Where's the resistance? Well, it could be a moving average if it's over the market. It could be a window envelope, which I don't show. Be too many lines on these charts in a quick way. That's in my subscriber videos. But more times than not, it's the Bollinger Band. And in the Bollinger Band, that number is now at the 38.86.5 zone. As markets hit these numbers, understand the theory. You're only going to stay over a Bollinger Band 5% of the time. The band moves with a formula that takes into account the highs, the lows of a certain frame of time and the volatility. Think of it that way. If you want to know more about it, just go to Investopedia, Bollinger Bands. They'll give you the formula and a good explanation. Or I think we do a great job in our volumes 1 and 2 of our free offerings of technical indicators. I think it's the simplest one out there. With graphs, it explains it according to how I teach it. So I think you'd like that. Again, slow stochastics embedded in this market. So embedded means locked in bullish. So I have the momentum up, I have the trend up, the bias up, target 38.86.5 again. NASDAQ embedded today. It's already made, I believe, a higher high than yesterday. Let's see. Tuesday's high was 1350. Nope, we didn't. We didn't take out 13.599. So until you do, on pullbacks, I contend the trade will be a buyer. This is called running the Bollinger Band. I also call it the Gorilla Glue trade, after the glue company. Why? They've got a powerful glue, right? A great glue. And when you hit that Bollinger Band and you marry it, and you just keep hitting it day in and day out, you eventually force, if it's the upper band, an embedded reading. If it's the lower band, the bearish reading. And when that happens, until it's lost, why not keep doing that? So when a market's doing something, until it stops doing it, you go with the flow of it. That's exactly what's going on. We've also had a breakout from this sideways action. So anyone thinking, nah, these markets aren't going, that the Biden administration, the market's going to sell off, wrong. You were wrong with Trump if you thought that. You're wrong with this one the same different way. Now, as we come over here to the Dow, no trend. You have a higher high, lower low, and you're sort of stuck in between at the 18-day average, correcting, current tense, an overbought condition. Until that 74 reading is over, I don't think you're going to attract the traders that look for momentum trades. You're overbought. A market that's losing the embedded reading tonight is the Russell. Excuse me there. If you take a look, you had good readings going home. You were 84.66. All of a sudden, you're 73. Now, it's early in the evening, but if this market can't recover that, and I'm telling you, by the morning, you've got to keep your eyes on this, the odds are this momentum is ended and this leg of the uptrend is coming to an end. That does not mean you're going into a bear trend. The momentum will have come out of this leg. Can it rescue itself throughout now until 4 o'clock on Wednesday? Absolutely. So you've got to give the market time. That's the hardest thing as a trader, patience. So hard. I know, because I'm one that wants to push that button to buy or sell all the time. In the VIX, again, you went up yesterday to the to the upper Bollinger Band 100-day average, and today, right back to that 18-day average. I call that the line in the sand for those of you that take my courses. You're neutral in this market. You have a lower low, a higher high. Neutral doesn't hurt the stock market. It's just drifting. What's the other thing? You know, if you go back a year ago and you look at where the chart was, you were closer to this is a top right in here towards the 10 low. So the market ratcheted up higher prices, and it's very comfortable sitting here. That makes sense. The market is higher, a lot more unknowns than we had before. In the bond market, why go through whatever the Fed's going to do? What the market did end is the market ended a wave of bearishness that we had here, went sideways yesterday up to that 18-day average, or 2 days ago actually, and now you're tonight just drifting. Could easily go back to that 18-day average. The trend is up going into the report. You have higher lows, higher highs, momentum up, bias up. Go into the report? I teach not to. 10-year note, trend up, higher lows, higher highs, overbought as can be. I think you'd agree, you see that right through there. Why do anything in this chart? Going into the FOMC. Dollar index. Now, if this dollar index gets under 90.03, that'll be a bear sign interim during the day. You would then have lower highs, lower lows under the 18-day average, setting up a potential, doesn't have to hit it, test of the lower Bollinger Band and resuming the overall downtrend the market has been in. And then it went into a pause, came up, and that might be the resumption of the bear trade. So I am watching that very carefully, but obviously concerned about the Fed, whatever it says. I'd like to see confirmation out of the Eurocurrency by getting over 122.03, closing over 122.02. That would give me higher lows, higher highs over the 18-day average. Yeah, I'm one of these guys that wants it all. I wait for all the pieces of the puzzle to fall together. Interesting, it's all coming together on the day of the FOMC. All you did in the British pound is hit the upper Bollinger Band, go back to that line in the sand, come back up to it again. You're not in a trend. You have a lower low, higher high, whipsaw type market, but certainly the strongest of the European currencies. Who'd have thought? Brexit, all the talk, and this is the cable as they call it, the strongest of everything. Then we get to Bitcoin, which, as you know, I said it's still in a downtrend, but it could easily pause here. Markets don't have to return to a Bollinger Band. I hope you realize that. You're in a downtrend. You're already oversold. The trend has been down. The bigger money was getting to that number, not in a clean, what I'll call downtrend, where you get the sell signals that are under an 18-day average. You didn't. You had them when you were over it. Hard market to trade. In the energies, the Brent is gaining ground again on WTI crude. You can see the Brent, though, has been an overbought market that is trying to slip back and get away from this overbought condition. It has not done it yet. I'm patiently waiting to see the next move. We did see today the API numbers. There was a net draw of about 800,000 barrels, and that takes into account the distillates, the gasoline build. They both saw a build, but a big draw both in Cushing and in regular stockpiles. So things you look at. On the WTI, the market's not reacting much to that at all, just sort of drifting here. Again, a market that lost an embedded reading. That's often a sign it wants to go back to the 18-day average. While the trend is down, the bias is up. When they clash, you don't have anything there. We get the EIA numbers out tomorrow at about 9:30 a.m., and they are looking for a build in that market. So we'll see what happens in that build. Heating oil, losing the embedded reading. So let's get back away from the Wednesday night trade. Did we lose it on the Tuesday trade? You betcha. Have you got it still lost? Yeah. I think the pros are bailing on their position now. They'll take a fresh look at the market after the EIA report. You don't have to be a hero when you're 2 days in a row losing that. In the nat gas, colder weather coming in, whipsaw market. You ended this leg of a downtrend, but you're not in an uptrend. You have a lower low, higher high. We have a lot of markets that are not trending. They're basically going sideways. Who cares? It's January 26th. The year has just begun. Give the market a chance. It's already had the beginning of the year, an impeachment. By the way, on the impeachment, today they had a vote that Senator Rand Paul brought to the floor of the Senate to see can a president who's resigned his office, does the Constitution say he can be impeached? The vote was, I think, 65-45 or 50. Yeah, by 10 votes, whatever it was, by 10. It's not enough to get an impeachment, is my point. I forgot what the exact numbers were. But you'd need to have all the Democrats and 17 of the Republicans cross over. The vote did not go that way for this level. That doesn't mean they can't vote for impeachment. Do I think they will? No chance. That's my own opinion. We'll see what happens. They'll have the vote. They'll probably have the trial, but he will not be found guilty, is my guess. You know, as I talk all these, and I realize the futures for some people aren't what they do, they like to take these ideas and apply them to the spiders, the ETFs that are out there, and everything else that we do in these markets. Why not? There's always something brewing in the futures markets. So if that's your cup of tea, let me help you with it. And what do I mean by that? Well, you just might be the type of person that you're looking for ideas when you wake up. What does the market look like? Here we're getting an open. I wish I had a chartist I can talk to. You know that Charles Schwab tries to sell a service like that. So does, I think, IBD and others. If you're interested in what I think I'm better than just about most of those people. Yeah, you'll say he's conceited. Nah, been around it long enough. I know what those young kids can do and not do. I'm a futures guy, not an options guy. I admit that. But if you're looking for that analysis, I make it simple. Every morning, I'm recording on my futures video at 5:40 a.m. Why that time? The futures open well before the spider ETF markets. And I know there's pre-markets in some of the stocks and so on, but I want to give you what the market's done, how it's done it, where you might be looking, so that you get plays on the DIA, the IWM, all the different areas you're looking for. And at 8:30, I wait actually at about 8:40 in the morning Central Time. What I do is I then record a spider ETF video. Now I'm looking at the opening, giving you an up-to-date chart on 41 or so charts on spider ETFs. Introductory price to see this, $8.95. Not very much, I think you'd agree. How many videos do you get? 26 a month. I do one every day of the week, and then on the weekend I do a video only of weekly charts. Now during the week I also will take a daily chart and back it up if I see something strong with the weekly. How are the two doing together? And I'll apply more indicators than you're seeing here, but ones you'll understand. If you take my charting course, you feel like, whoa, where have I been? This is exactly the discipline that he keeps talking about with all the things that I do. Go to our website, under the word research, it's all explained there. What do you have to lose? $8.95? Just maybe it'll help you out. I'm Ira. You have a great day.